Today, we're going to unpack one of the most powerful and, frankly, disruptive forces in modern finance. And no, it's not a new company or some kind of super algorithm. It's the absolutely immense and measurable financial power of a single person. We are talking about the Elon Musk effect, a phenomenon where just one tweet, a casual comment, or even a simple change to a social media profile can send billions of dollars surging through global markets in a matter of minutes. But to really get our heads around this, let's start with a really simple question. How much is a single word worth? And I don't mean that in some poetic, metaphorical sense. I mean, what is the literal cold, hard cash value of one word typed into a social media bio? A few bucks? Maybe 1,000? Well, let's take a look at a very specific and very, very expensive example. This is it. That's the word. On January 29th, 2021, Elon Musk, without any big announcement or fancy press release, just added this one hashtag to his bio on what was then called Twitter. That is all he did. One word, one symbol. Now, for you, for me, for pretty much anyone else on the planet, this would be a totally meaningless act. For Elon Musk, it was a financial earthquake. That one word, that single hashtag, turned out to be worth $111 billion. In just the hours that followed that little bio change, the total market value of Bitcoin shot up by that exact amount. Just think about that for a second. That's an amount of value bigger than the entire economy of some countries, created out of thin air by a single word from a single person. And this chart, wow, this shows you the exact moment it happened. Just look. You can see the price of Bitcoin just kind of chugging along, doing its thing, relatively stable. And then right there at the zero mark, that's the moment the bio was updated. You see this, an almost perfectly vertical line straight up. This isn't just a little bump. This is a seismic shift in the market. It's the visual proof of an entire financial system being fundamentally warped by a few keystrokes. This right here, this is the Musk effect in its purest form. Okay, so we're about to dive deep into exactly how all this works. But before we jump in, don't forget to like, share, and subscribe, and check out the links in the description if you're looking for a real estate agent in your market or you need life insurance. My team and I can help you anywhere nationwide. But here's our game plan for today. We've just witnessed the incredible power of what we're calling the $11 billion post. Next up, we're going to ask, where does this power even come from? We'll explore that by looking at Musk as a paper trillionaire. Then we'll get into the hard data and really dissect the effects scientifically. After that, we'll see how this whole thing applies to the stock market through something called the Musk premium. Then we'll see how regulators are trying to keep up. And finally, we'll ask the big question: what does all this mean for the future of markets? So how is it even possible for one person to have this kind of market moving power? Well, to really understand the effect, you have to start with the source of the influence. You see, it's not just about being rich in the way we normally think about it. It's about the very nature of his wealth and the epic story that's been built around it. Elon Musk is, for all intents and purposes, a paper trillionaire in the making. And look, Musk himself has been incredibly clear about this. His massive fortune isn't some giant vault of cash he can swim around in. It is almost entirely tied up in the stock of the companies he founded and still leads. And this is a really crucial point. His wealth is a direct reflection of what the market believes his future vision is worth. It's not in a bank, it's in our collective perception. And that makes his public persona and the stories he tells so incredibly powerful because they directly and immediately impact his own bottom line. This chart just makes it crystal clear. The huge, overwhelming majority of his wealth is equity. It's stock in Tesla and SpaceX. Now try to find the slice that represents his liquid cash. See it? It's basically invisible, right? Less than 1/10 of 1%. This whole structure means his own financial incentives are perfectly aligned with getting the public to believe in his vision, which in turn drives up the valuation of his companies. When the market believes, his wealth absolutely skyrockets. It's a really powerful self-reinforcing feedback loop. And the scale of this belief is just staggering. I mean, analysts are projecting his net worth could hit almost $850 billion by 2026. You've got prediction markets where people bet real money on what's going to happen, giving it a nearly 80% chance he'll cross the trillion-dollar line before 2027. And then there's the potential for a mind-boggling pay package from Tesla if he hits these outrageously ambitious goals. So the market isn't just valuing what he's already done, it's placing this enormous multi-hundred billion dollar bet on what he's going to do. That belief is the absolute bedrock of his influence. Okay, so we've established we have a paper trillionaire whose wealth is completely tied to public perception and storytelling. But how can we actually, measure his influence scientifically? Anecdotes are one thing, but we need hard data. And for that, we turn to the perfect laboratory, the volatile, 24/7, and mostly unregulated world of cryptocurrency. It gives us this clean, almost sterile environment where we can isolate and quantify the Musk effect without a lot of outside noise. The tool the pros use to dissect this is something called an event study. It's a standard, well respected method in finance, and it's pretty simple, really. Researchers look at how an asset's price normally behaves to get a baseline of what's expected. Then they isolate a specific event, in our case, a Musk tweet, and they measure how much the price deviates from that normal baseline. That difference is called the abnormal return, and it lets us put a precise, quantifiable number on the tweet's impact. And the data we're about to look at comes from a really detailed paper by the Blockchain Research Lab. And look, they didn't just cherry pick one or two viral tweets. They did a rigorous event study across 47 different crypto-related posts from Musk to find a real, statistically significant pattern. So what you're about to see isn't just a theory, it's the result of systematic academic work. Now, this is where it gets really interesting. On the left, in panel A, you see the average market reaction across all 47 of those crypto posts. You can see a definite spike right at the 0 hour when the tweet goes out. But now, look at panel B on the right. This isolates only the tweets that were specifically about Dogecoin, and whoa, the effect is just magnified enormously. The spike is way sharper, the returns are way higher, and the impact lasts longer. This tells us something really important. The Musk effect isn't spread out evenly. It gets highly concentrated on whatever specific asset he decides to put his attention on. Let's geek out on the raw numbers for a second, because this is where it gets absolutely wild. This table shows what's called abnormal trading volume, or ATV. It's just a fancy way of saying how much more trading is happening than normal. Now look at the column for Dogecoin. In minute 0, the very instant a tweet is posted, trading volume explodes to over 2.5 times the normal level. 1 minute later, it's at nearly 3.5 times normal. This is the digital version of a fire alarm going off in a crowded theater. It is an immediate, overwhelming, immeasurable market frenzy triggered in less than 60 seconds. So you can see this clear, consistent chain reaction that happens every time. Step 1, the tweet goes live. Step 2, within seconds, you get this combination of high-speed trading bots and millions of human followers, causing a massive abnormal spike in trading. Step 3, this flood of buying pushes the price up dramatically, creating what we call abnormal returns. And finally, the effect doesn't just disappear. The study shows that the higher prices and trading volumes stick around for at least 2 hours, sometimes even longer. It's a predictable, repeatable pattern. Now here's where it gets truly fascinating. Musk himself has gone on the record and said, quote, "My tweets about the cryptocurrency Dogecoin are only jokes." He frames it all as just lighthearted fun, not serious financial advice. But as all the data we just saw proves, the market does not treat them as jokes. The financial consequences are very, very real. How real? Well, in the first hour after one of his Dogecoin jokes, the cumulative abnormal return was, on average, a positive 6.33%. Let's just put that into perspective. A traditional long-term stock market investor is happy to make what, maybe 8 to 10% in an entire year? Musk can generate more than half of that with a single tweet in a single hour for an asset that he himself says is a joke. So why is the effect so much cleaner, so much more powerful for Dogecoin compared to a huge asset like Bitcoin? Well, the research paper has a really compelling answer. You see, with Bitcoin, Musk's comments were kind of all over the map. Sometimes he was positive, other times he was raising concerns about its energy use. So those mixed signals, both good and bad, they tended to cancel each other out over time. But his Dogecoin tweets, they were almost always positive, playful, just meme-focused fun. That consistent, one-directional positive vibe creates a super clean, statistically significant impact, which makes Dogecoin the perfect isolated case study of the Musk effect in action. Okay, so we've seen the hard data from the wild west of the crypto space. Now we're going to pivot and see how this same kind of influence plays out in the highly regulated world of the stock market. But before we continue, a quick reminder to like, share, and subscribe, and check out the links in the description if you're looking for a real estate agent in your market or you need life insurance. My team and I can help you anywhere nationwide. All right, so the effect is undeniable when you're talking about crypto. But what happens when we move from meme coins to a trillion-dollar publicly traded company like Tesla? Well, here, the influence is less about those quick, sharp spikes and more about something deeper, something structural. It's a core component of the company's value that analysts have started calling the Musk premium. First, let's just ground ourselves in what the business actually is today. As of late 2025, Tesla is still, at its heart, a car company. The automotive division makes up the lion's share of its revenue, around 72%. The energy business is growing like crazy for sure, but it's still just over 12%. So on paper, its main business is building and selling cars. But, and this is a huge but, the market does not value it like a car company, not even close. Just take a look at the price to earnings ratio. This basically tells you how much investors are willing to pay for every dollar of profit a company makes. For old school automakers like Ford or GM, that number is usually under 20. For Tesla, it's a colossal 280. They're not even in the same league. So that raises the big question. What on earth justifies that massive astronomical gap? And the answer is what the market calls the Musk premium. It's the part of Tesla's valuation that you simply cannot explain by looking at its current car sales or its profits. It is the value that is assigned purely to the market's collective faith in Elon Musk's ability to deliver on a whole slate of world-changing future projects. When you buy Tesla stock, you're not just buying the company as it is today, you're paying a huge premium for the story of what it could become tomorrow. And analysts had actually put a number on this premium. It's estimated to be somewhere around $500 billion. Just let that sink in. Roughly half of Tesla's entire trillion-dollar plus valuation is being attributed not to its existing business, but to the belief in one man's vision for the future. I mean, that premium alone is worth more than almost every other car company on the planet, combined. So what makes up this $500 billion bet on the future? It's built on these key pillars, these grand narratives. It's the belief that the robotaxi network is not just a concept, but will be a massive, operational, high-margin business. It's the bet that Tesla will become a dominant force in AI, designing its own chips and now producing everyone else. It's faith in the exponential growth of its energy storage business. And of course, it's the long-term, almost science fiction vision of humanoid robots with Optimus. Investors aren't just buying an EV company. They're buying into a vertically integrated AI and robotics powerhouse with Elon Musk at the helm. Now, this kind of individual influence, the power to create and move hundreds of billions of dollars with a few keystrokes, it does not go unnoticed. While the market is captivated by the story and the potential for huge returns, the financial watchdogs are, well, they're concerned. This new kind of personal, rapid-fire influence is a massive challenge for regulators whose entire job is to make sure markets are fair and orderly for everybody. And you can see their concern right here in their official reports. This is from the 2026 annual report from FINRA, the Financial Industry Regulatory Authority. You can think of them as the financial police. They write and enforce the rules for every broker in the United States. And what they decide to focus on in their most important document of the year, that tells you everything you need to know about what's keeping them up at night. Just look at their top priorities listed right in the table of contents. Manipulative trading, communications with the public. These are the exact issues at the very heart of the Musk effect. Regulators are actively trying to figure out where the line is between just being an enthusiastic promoter and illegally manipulating a market. And the fact that they added a whole new section on generative AI for 2026, that shows they are scrambling to get ahead of the very technologies that could amplify this kind of influence to an even greater degree. And their own words confirm it. This quote is all about sharing intelligence on key risks and emerging challenges. Let's just translate that from regulator speak into plain English. The Musk effect is arguably one of the biggest emerging challenges they're facing right now. They're sending a clear signal to the entire financial industry that the old rulebook just wasn't built for a world where a single social media account can pose this kind of risk. So when you pull all of these pieces together, the hard data from crypto, the massive valuation premium at Tesla, and the urgent reaction from regulators, it really starts to paint a picture of a fundamental shift. We could be looking at a whole new paradigm for how markets work and how value itself is even perceived. You know, the old model of market information was slow, deliberate, and it was controlled by institutions. Companies talked to us through these carefully planned press releases and quarterly earnings reports that came out just 4 times a year. Today's model is instant, it's personal, and it's all driven by narrative. Value is literally created and destroyed in real time, based on the sentiment flowing through social media, and it's often led by a single charismatic person. And this all leads to a really profound and difficult question. For decades, the entire system of investor protection was built to regulate institutions, companies, brokerages, big investment funds. But what happens when a single person has influence that rivals or even beats those institutions? Who is responsible for protecting the average investor from getting swept up in a narrative-driven frenzy that they might not fully understand? That right there is the central tension of this new era. It is definitely a lot to think about. And as we wrap up here, one last time, don't forget to like, share, and subscribe. And please check out the links in the description if you're looking for a real estate agent in your market or you need life insurance. My team and I can help you anywhere nationwide. So we'll leave you with this one final thought to chew on. Is everything we're seeing, this incredible concentration of market moving power in one person, is it just a temporary anomaly, a weird feature of our current moment in time? Or is the Musk effect something more? Is it the actual blueprint for a new kind of capitalism where these visionary stories and personal influence become the main way value is created and destroyed in the decade to come?